Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, March 2nd, 2016. My name is Doug McKay. I am the founder of Quantum Leap Futures and the head moderator. Each morning we come together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, drill down to where our trade levels are going to be, what our targets are going to be for the day, and what our main hypotheses are. This is a subscription room, so if you're interested in coming in and checking us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, if you do want to check me out, just send me an email at quantumleapfutures@gmail.com or send me a Skype request at Doug_McKay. We do use Skype to chat, so if you want to join us, you're going to have to open up a Skype account. Very easy to do, free to do, only takes about 30 seconds. Send me contact info. I'm the one from Windsor, Ontario, Canada. Of course, if you like this video, there's over 300 days of these pre-market sessions. You can take a look at what we do each morning and what our success rate is on our hypotheses. If you like what I do, please follow me on Twitter at Crazy2. Unfortunately, this is not a commercial venture. There's no website. There's no blog. It's just us live here in the go-to every day during the market hours. Okay, so taking a look at yesterday. Yesterday, we were actually looking for a rotational day, but we had our key line in the sand above. We said we got above the 67. We were likely to go into a trend and go up towards that 77.25 target and possibly up into the 85, 86 area, which is our next big target above. This impulse move gave us a measured move against the zipper up to 78, 75. We had lots of time to trade that. We got up to 78.50. We missed the measured move by 1 tick, and they did take the measured move out in the Globex. So we ended up with a trend day. We closed near the highs. Overnight, they'd come back and tested this low volume node, the closing swing low down in the 71.70 area. I don't know where we're trading right now. We're trading 72.75 right now. We still have strength. The idea today is to come back into the 68 area, find buyers down here, and then have a continuation day and a move up into the 87. But we'll get into that a little bit more. Each morning I like to start with a simple candlestick chart. I start with the monthly. I use a 9 EMA and a 20 SMA. Those are my moving averages that I use. And I'm simply using the moving averages to see where we are within the trend on the different time frames. I'm looking for slope and separation and where the trend is being challenged or violated with the possibility of a change in trend. You can see on the monthly we've had beautiful multi-year upward trend. August and September we challenged that trend and violated it. October and November we took it back. And then December we challenged it but didn't close below, and then January and February we did close below. February turned out to be a doji month. We closed 1 tick below our open, and then so far in March we're having a positive March to come up to test the 9. We do have a possibility of a downward trend starting though on the monthly, but it'll be interesting to see once we get back above this 1996 if they'll take us right into the 2000s, which are, I'm pretty confident that will happen if we can get back above that 97.75 area. Going down to the weekly, we have had this downward trend. We created this technical gap, brought it back, closed the gap, closed above the 9. So far this week, we're coming up to test the 20 SMA, That'll bring us up into the 1988, 88, 89 area. We do have a naked cross right here at 2008.75, and believe it or not, our daily upside ATR target is 2009.50. Our 20 period daily ATR is running at 38.25 right now. So based off of the bottom we've got in the Globex, we have room to go up and close out this naked cross today and be within range. So, you know, don't want to say it's going to happen, but it's definitely within the range and within the possibilities, and you know how strong these naked crosses are. Going to but the downward trend is being challenged right now on the weekly, but we could fail again off of the 20. Going to the daily, you can see we do have this upward trend, slope and separation. We have created a technical gap on the daily, a move down to close the gap. It's going to bring us down probably into the 1947, 1950 area by the time we get there to close this gap on the daily. Remember, you have to always keep in mind what time frame you're looking at these technical gaps and these naked crosses. Going to the but the trend itself is to the upside on the daily. On the 4-hour, we've had consolidation. They challenged both sides of it. Now we've got the move up yesterday. We have created a technical gap, getting a little bit of a rollover, possible inverted cup and handle. Handle obviously is not setting up yet. A move down to close the technical gap brings us down into the 65, 66 area. But we do have slope and separation to the upside. And we do have a naked cross right here. Although I don't like these naked crosses that are only a little dip in and back again. So they're not as powerful as something like this naked cross down here. That's all the way down into the 1840s, which we will take out at some point in time. Going to the 1 hour, you can see we had the strong trend up. FUBAR, Mr. Sneaky, by the way, tech gap showed up on multiple time frames with that pop to the high overnight, led the move down. So we had strong move up. FUBAR, it shows up better in the smaller time frame. FUBAR, Mr. Sneaky, tech gap, close the tech gap against the 9, close the tech gap against the 20, and we're coming up and testing the naked cross that we put in on the move down and taking it out. So we are below the 9 and the 20 on the 1 hour, so we are seeing some weakness in this upward trend. Going to the 30-minute, you can see this FUBAR, Mr. Sneaky on the 30-minute as well. Technical gap, move down. Now we're getting a downward trend. And start of a downward trend on the smaller time frames. Coming into the 15-minute, again, FUBAR, Mr. Sneaky, not as much of a tech gap, and then the rollover and the move down, and we had strong slope and separation. They challenged it on the news, and now they're coming back down again, but it is weaker to the downside, but we are getting continuation. And then the 5-minute, this shows the FUBAR, Mr. Sneaky best, huge volume spike that pushed through. We were trading at this particular time last night, trying to break that 82. We were talking about, Marvin and I were talking about this this weak high that was put in at 82, and we were banging and banging and banging, and then pop, and they popped it all the way up to 84.50, and this actually happened in milliseconds, and then weakness came in, and then eventually that setup led this whole move down into the Globex. And we've had some consolidation here, tried to get the trend moving back up, and they failed again, and now we continue to have a downward trend. We do have a naked cross right here at 74 they just put in on the 5-minute. All right, so as you can see, we're seeing some weakness. We'll probably get a pullback. I'm looking for a pullback into the 68, 69 area, possibly a little bit lower. Then I'm looking for a continuation. But let's take a look at the structure. So here's a big picture. So we've been inside of this microcomposite value area, which runs from January 7th through till this actually shouldn't be in here. Let me just pull this out. Because this is our breakout day. We been inside of this value area that's been between 36.50 and 1858.78, just chopping around, testing below, testing above, testing below. And then the last price before we broke out of value was down here at the 1923. And then we popped up and we tried to hold value at 49. They came back in, tested below. They actually came down and tested in the Globex down here, found the buyers, okay, and then we popped yesterday and broke out of the range above the 69, and we're heading towards my main target above is still up here. We've got this naked close, the naked microcomposite VPOC from where we tried to hold value after we fell out of this balance up here. When we fell out, the first spot they tried to hold value is 86 area, 87 area. So once we've broken out of this area, which we did yesterday, we have to look for continuation to advertise to the sellers up to where the last place they tried to hold value before coming down and creating this balance. Okay, from balance to imbalance to balance and back out and back into price discovery again. We still have, the most traded price going back to 2013 is still above us. It's all the way up here at 2070.75. Even with a retrace back into the balance down here, I still believe that we're going to come up and start testing back up inside of this balance area. I don't know if we'll get to the 2070, 75, but there is a possibility, but it's not in the cards for today. So looking at today, right now we're trading 72. Our overnight, what did we put a new overnight low in? Sorry, charts are all messed up right now. No, we put a double bottom in. So we do have a weak low on the Globex right now at 71.25. We probably could even take it out. We've got the naked VPOC down here at 68.50. So we are above the 69. 69. More importantly, the CLVN at 67.75 is going to be our warning line today. Below that, if we don't find buyers in that at the VPOC from yesterday in the 68.50 area, and get below the 67.75, then I'd be looking for a move down to test the value area of this smaller 3-day microcomposite down here at the 59 area, 60 area. Below that, I'm going to be using the 60.75 as my key line in the sand. Below that, I think we come back down, test the midpoint, and come back down to the 52.25. If I add yesterday's profile into this 3-day microcomposite, making a 4-day microcomposite, value shifts up to 52.50. So 52.50 is where they accepted value just before the breakout, but I think the 49 is more important, and I don't like to put breakout days in my smaller microcomposite. So I'd be looking for the 52.50, 52.25 CHVN, and a move down to the 49 if we get below this 60.75. But my main hypothesis is to come down, test the 68.50, 67.75, maybe pop a little bit lower and then find responsive buyers and give us our continuation up into the 87.50 and take out that naked VPOC and naked close that's there. But if we do get below the key line in the sand, 60.75, looking for a move back down into the 52.49. Above the 87 area, we should see some resistance coming in at 91.75. Anything above 91.75, look for them to move up into the 96.50 and possibly into the 2000s. Remember, ATR to the upside today is all the way up at 2009. Our weekly ATR is below that. So let me just bring the overnight. Let's start putting our levels in. So our overnight high is up at 84. Our overnight low currently, we just put a new, we one-ticked the low. That could be a nice failed auction there at 71. If we go lower, let me know while I'm doing this so I can make the adjustment. Our overnight VPOC shifted down. It was at 77. It's shifted down now to 73. And a pretty good Gaussian distribution here. The only real LVN I would consider would be the 1980. And that's just above the breakout of the prior day range. And there's really no other information I need from the overnight session, so we can get rid of that. Expand this out. So we do have the CLVN at 72. I don't think it really offers us any edge. You can see how blunt this profile is in this upper distribution. A lot of undetermined fair value down here. So really, it's a weak area to lean against. You can see that even on the composite, this whole area here is very blunt. So it's going to be very tough to trade in this area. I'm expecting a lot of chop coming into this open if we open in this distribution. The only real edge we have right now is down here at the 67.75. And then the LVN down here at 64.50. And then it gets pretty thin below. So if you need a line that to use to trade to the upside before you get to that 80 and 82 area, it's definitely going to be the developing value or the value area high from yesterday, and really you have to incorporate it into the high itself. Make sure if you're going to get short, you're below 78. You're going to get long, make sure you're above 78.50. Then you got that 80 level just above you. Above 80, you've got the 82. That was our resistance last night, but I think if we get above the range, we'll take out that overnight high and come up here and then come into the 85.50, 86, and the next big target, which is up there at 87.25. And then above there, our next key line in the sand above is going to be the 91.75. Anything above 91.75, look for them to go out and take out the weekly ATR target, hit that 96.50, and test the 2000, and the next resistance comes in at 2003.25. We do have a naked VPOC up here at 2008.25, and this 2009.50. And that is our daily upside ATR target. So far, actually, it's going to come down one tick because we've one ticked lower. And that's what I'm looking at to the upside. again, there's not a lot of edge in here, so we have to look to the smaller time frames to try to find a level in between, almost this 11-point range that we've got going right here. You could use the LVN here, 70. That was a closing swing, low. So you could use that. If you think it would get below the 70, you got a decent trade down into the 68. We would have already taken out the overnight low or expanded it, and I think you got a decent trade down into the 68.50, 67.50. Below 67.50, look for them to come down to the bottom part of this upper distribution and test the 64. And then below that, it gets pretty thin. I'd be looking at the 62.50. And then the midpoint is where I'd be looking for some responsive buying down here, a retracement to the 50% of the significant breakout candle. And then below that, we're getting into this distribution down here. So we've got the 52.25, but I would be looking at the value area low here at 53. The 49 area. Our daily downside ATR target is down at 1945.75, and then below that we've got that 41. And then the 38.25, and anything below 38, I'm looking for a move down to test our key line in the sand down here at 36.50, which is the microcomposite value area. And then below that, look for a bigger retracement back down towards the 23s. But the big one being down here at the 15. Remember that the 1915 is that major microcomposite VPOC. Actually, if I incorporate all the volume back here and run it through, the VPOC is still down at 1915. But the reason I don't have that is I wanted to identify this 1890 within this balance zone. So I'm doing a little bit different than Murad, but I still recognize 1915 as the next big target below. Okay, so I'm not looking for more than that. Again, the main hypothesis is to work our way down into the 68.50. Either put in a new overnight low or take out the overnight low, chop around down here, find some buyers, and look for some continuation pattern up into the 86 level and 87.25. And then if we get above the 91, a move to take out the weekly ATR and a test into the 2000s. So that's my main hypothesis. My secondary hypothesis is they go up, fail to break out of the range high, rotate off of the value area high, and come back down through into the 68.50 and get a move down back towards the midpoint and chop around and repair the auction down here between the 45 and the 63, 64 area. So those are my two main hypotheses. Don't know which one's going to play out, but we know what we're going to do against those levels. Taking a look at the Keltner, center Keltner line right now is 74. If we stay below, a move down to the lower Keltner takes us down to take out the VPOC and the lower Keltner line at the 67.50 and test that CLVN. If we get above the 74, a move up to the VWAP from overnight brings us up into the 76, and a move to the upper Keltner line takes us up into that 80 area that we identified from the overnight LVN. Quick look at gold. We continue to chop around in this distribution area right here between 22 and 52. Expecting more chop today. We made a big move in gold from Sunday night. They've come back into balance. Now I'm expecting to chop the next day or two as they accept this price around the 33. Below the 22.40, look for a bigger move back into this 12.10 area. And if we can get above the value area of the microcomposite and break above 52, then I'd be looking for us to come up and test the other side of this balance up here at 71.90. Continue that move up towards that 1300. So that's what I'm looking at for gold. Now, I am going to close the room down. I'm going to start closing the go-to down after the pre-market session so I can get the recording. For those that can't attend the pre-market session, they can have the recording early rather than getting it the next day after we close. I'll open up a new go-to in 5 minutes. Everybody trade well, trade safe, and we'll catch you on the flip side.